In this video, I will share the different types of legal structures of how a business can organize. We will look at the various types of structures listed on the diagram, starting with the top left of sole proprietorship, where there's only one person involved, and then move to the bottom left with multiple owners in partnerships. On the right-hand side, we'll take a look at corporations at the top, followed by special business types at the bottom, where we can have a mix of owners with both of these. A sole proprietorship is the simplest type of business structure. There's only one owner who has full responsibility for the business operations. Generally, this is a service-oriented small business such as a restaurant or professional services office. There is no legal or financial distinction between the owner and the business, so personal and business income is treated as one as well as liabilities. A general partnership is similar to a sole proprietorship, but it has two or more entities. Partners enter into a partnership agreement where each partner is personally liable for any debts or claims that the business is responsible for. Partnerships are registered with the IRS, and each partner reports their share of business profits on personal taxes as income. A limited liability partnership is normally organized by general partners that are responsible for getting the limited partners to join the partnership. The limited partners are not personally liable for any of the liabilities and are not included in many of the day-to-day operations. These can be very complicated to set up and are expensive. A limited liability corporation may have one or more owners. It provides limited liability to the owners for the business's liabilities, including debts, judgments, and other items. This type of structure is often beneficial when any of the owners have large amounts of personal assets to shield from a potential liability associated with the business. The owners of an LLC may pay personal income taxes on their share of the profits that the LLC keeps during the tax year. A corporation is like any other business structure we've covered thus far, because it's its own legal entity and tax entity. Stock may be issued to raise capital. It's managed by a board of directors, which is elected by its shareholders. It pays its own taxes on profits that it keeps, and the owners of the corporation pays income tax on monies that they draw from the corporation in the form of salaries, dividends, and bonuses. A nonprofit organization, or NPO, is dedicated to furthering a particular social cause or advocating for a shared point of view. It uses leftover revenues to achieve its ultimate objective rather than distribute it to its shareholders, leaders, or members. Nonprofits are tax exempt or charitable. A cooperative or co-op is owned and managed by the people who uses its services. The members contribute capital, but all have equal voting rights and share in its earnings. A co-op will usually have a social goal by putting profits back into its community. A franchise is an independent business license of a successful business. They receive the use of the proprietary knowledge, processes, trademarks to sell the offering under the business's name in exchange for a part of their profits.